All right, great to have you with us. Hope you had a great weekend. We mentioned some softness for stocks as we get ready for the Tuesday trading session. It wasn't that long ago we heard about one credit rating agency downgrading the U.S. on some of those squabbles in Washington. Now you have another credit rating agency this morning that is making headlines for downgrading some regional banks in the United States. Remember, we had all that turmoil earlier this year in the banking sector south of the border. Now the Moody's team is worried about the health of some of the regional players just based on their real estate portfolios. Everybody keeps wondering in this interest rate environment what happens to commercial real estate, some of the funding needs for these regional players. And so we are seeing some broader weakness for financials this morning. The SEC, meanwhile, filed charges against 11 Wall Street firms for failures in record keeping. So maybe this is something to be overly concerned about. Maybe this is a market that has had a relatively nice run and is looking for reasons to sell. Let's get insight on all of that now from Sadiq Adatia. He's Chief Investment Officer at BMO Global Asset Management. Nice to see you.
Thanks for having me.
I mean, I'm going to try to answer my own question, which is that it does feel like investors in many ways were non-believers in the momentum we saw in the first half, at least for the S&P 500, because that cautious tone is very much in play this morning.
Yeah, I think you're right. We've had a great run. People have been cautious all year, expecting a recession, expecting pullbacks in markets, and we just haven't had it. We're also going into a period where traditionally, this next couple of months is kind of weaker from a market perspective, and people are coming back from vacations and whatnot. So I think you will see a bit more softness here in the markets, and news like this is going to just add to it.
So what's interesting about news like this as well, because we talked about how you had Jay Powell, the head of the U.S. Federal Reserve himself, say that the economist team at the Fed no longer anticipates a recession. You had in the U.S. Bank of America, their economics team came out and said, we no longer anticipate a recession. And yet you're reminded of some of the potential cracks, I suppose, under the hood if regional banks are struggling, or at least in the view of a credit rating agency?
Yeah, I think if you think through all of this, I think no one is saying that the economy is going to get stronger from here. I think everybody's agreeing to the fact that the economy is going to likely weaken up a little bit. The question is by how much. And so those that pulled off the recession have said, if we've stayed this strong up to now, we're likely going to be okay. We're still in the camp of a recession. We have actually a high probability over the next 12 months, about 85%. That being said, we're not expecting anything severe or anything long-lasting by any means. So I think the camp still remains that you're going to see softness in the growth numbers, softness that we've seen already a bit in the earnings numbers, and then also softness that we're going to continue to see in the job market as well. And that should lead to some downturn impact, but nothing that should be too severe.
And I think what's interesting as well is, since we are knee-deep in earnings right now, you can see what companies are saying about their own business. So on the one hand, we've heard about consumer resiliency. On the other hand, I noticed that delivery giant UPS has seen its shares weaker in the pre-market. There seems to be some concerns about the overall amount of package volume. As you've surveyed the landscape during earnings season, because companies are generally showing an ability to please Wall Street with the traditional metrics, has it left you with any takeaways on the health of corporate America, corporate North America?
Yeah, I think, first of all, our expectations of earnings had dropped coming into this as well, right? So I think people are beating on this lower expectations. But if you look at it, you would gradually have seen earnings come down. And so when we look through the health of the economy, it's still good and the consumer is still spending. But they are adjusting, and we are seeing a softness coming through slightly across the board. And UPS is a good example of that, where if you're seeing volumes come down, that means people are just not doing what they were traditionally doing in the past. I think once we get past the summer month, we'll see some softness in the travel and leisure as well, because we're seeing softness there now on the hiring front as well, where there was excessive amount of job openings there that people were dying to hire for. We're seeing softness there as well, too. So therefore, I think you're starting to see softness across the board. And again, over the next couple of quarters, we should see that play out also in markets.
How do you How do you make a conclusion when there are so many different markets around the world on what the tone is? China had some data this morning, which that's another consideration, I suppose, for how strong is that economy, which was the big story. I felt like for the first few months of the year, and then we started to back away from that. And again, it's kind of like these regional banks this morning. We're back talking about worries out of China.
Yeah, I think like you said, at the beginning of the year, everybody was very bullish about the reopening, and we saw markets take off as a result of that. And then the sell-off happened right thereafter because it didn't plan out as much. We're seeing exports drop off, imports drop off in China. I do think now the expectations are relatively low, so it's a lot easier going forward to beat on that front. So we're still a positive on emerging markets more broadly. But we do think that when we look through Canada and the U.S. as an example, the U.S. has had a great run, strong expectations. It's time probably pull some money off the table. So we're moving back to neutral in the U.S. In Canada, we're also neutral there, more for a defensive purpose reason than anything else. We think energy is probably relatively priced here. We do like gold in this environment. And international markets where we have a bit more of the negative tone there, we had seen great positive surprises all through the first part of the year, given all the negative things we were expecting last year. But I think that positivity is starting to turn, and we should see some pullbacks in international markets as well. So neutral Canada, neutral U.S., underweight international, and overweight emerging markets.
Okay. So